guys, I hope you all had a wonderful Thanksgiving. For all my followers down in the US. I am US born but live up in Canada and just moved my office to what used to be the nursery now that my two little girls are staying together. So you might see some books in the background on in the shelf behind me. But this week was crucial. You guys, if you don't follow my blog, definitely do. Definitely check out this last post where basically I was talking about, I think it's going to go down to roughly 236, which is the 200-day moving average on the monthly chart right here. And I will tell you, I was pretty shocked. My buddy JC Peretz from All-Star Charts, amazing technical analyst. Definitely check out, so you just go to allstarcharts.com, click on the blog area, go down and check out his video that he did with Catherine Murray from BNN, where he's talking about 2350 on that SPX, which is basically exactly what I've been saying. On the monthly, you can see this is the 50-day moving average right here, and I'd said 236, 232 area. Then if we pull it back to the weekly chart, we're gonna see it's the 200-day moving average is right here. This is a weekly chart, so that's putting it roughly 233 around December 3rd. So that's pretty crucial, right? If I'm not the only one that's seeing this and talking about the activity that's going on. If we back it out too on the monthly chart, I do have this brown downward trending line as the monthly candles, the top of the bodies of the monthly candles. So if we pull that back on the weekly chart, you can see we've just been holding right below it. And even on the daily chart as well, it's just holding right below that. So I think we could definitely have much more of a downward trend to come. Depending on if we break this trend line right here. This is the last bounce line that we had, right? We had that breakdown back in January. It bounced in February, bounced again in April, came down. We touched this down in the end of October, which was the last downtrend. Now we've had what I called before the dead cat bounce. So it bounced up, tested that trend line, and now it's pulling back down. So if we don't see support stepping in, we don't see the big volume, right? So we had a big volume spike here when it hit this candle. If we don't see that big volume coming in, which obviously Friday was a lower day and lower volume, I think that we're going to be heading down to the C right down here. So definitely check that out for the SPY analysis. And oh, I forgot to tell you guys too, definitely check out my blog. This week through Monday, Cyber Monday, my watch list is 20% off with the thanks promo code. If anybody's interested in using Trade Ideas is amazing. 25% off. I'll have the link down below as well as TradingView. TradingView really has amazing software as well. They've got free charting, and then they also have a premium package where you can go ahead and get it, and it's 60% off for Black Friday. So definitely check all that out. I'll have all the links below. So we'll get into, we had talked about the SPY. Let's talk about NASDAQ, really the technology sector, right? This has just been tanking away as well. We broke the 200-day moving average. We broke the 50 average. The 50 average is about to cross over the 200, which is sometimes called the death cross. We did see that earlier this past week right here. I posted it up on TradingView if anybody follows me. Posted that up. Yep, death cross right here on Netflix, and it's been coming down. So we might see that continuation with NASDAQ as well, where it goes overhead. We're not that far away, a couple days really, if this downward trend continues. And this 200-day moving average is pretty, it's pretty horizontal, looks like consolidation, and could be downward trending. So that's not good to see, especially if we start seeing that 50-day moving average come down too. Also on, look at that, death cross as well, right on the Russell. So these are not good signs for the market to rebound. It's more signs of downward to come before we see an upswing in the market, in my personal opinion. As always, with my watch list and all of these videos, it is just my personal opinion, so please make sure to do your own due diligence before trading, as all results are not guaranteed and markets always carry varying degrees of risk. So let's go ahead and get into the potential longs for the week. So we have overstock. I had a gentleman asking me about this on Twitter. Let's get rid of these. Hold on, let's go ahead and zoom in. I'm trying to get rid of the lower ones. This was from Friday. So actually, if you'd have my watch list on Friday, I had that basically 1690 was the bottom, 1836. If it broke that, it would be a good potential long. Sure enough, it ran up and it closed at 2093. So we'll get rid of these, remove those, and remove this, make it a little easier to see. Okay, so we do have this 50-day moving average, which is at 2308. So I think that could provide some resistance as well after 2188. After that, we've got the 200-day moving average up at 3552. The reason why this is so interesting is it has 20 million in the float and 52% short float volume on Friday with its big candle. So if it does continue up with traders coming back from the holidays, we could see a low float run to the stock. All right, next on the list is CCIH. CCIH is a lower float as well with 22.79 million in the float, and it was 59.97% short float volume on Friday. We'll zoom it in a bit. So you can see it did break above this resistance just for a little bit, and then it pulled back. So I would say 148 for support on the 15-minute chart. You can see after hours it ran up, and 155 for resistance to be broken. So look for that as a potential runner as well with a lower float to it. Then we have INVA as well. Has a nice look cup and handle set up right here. So 1748 for support and 1812 for resistance. We'll pull it back on the yearly chart so you can see it in bigger picture. So it is setting a newer high for the year. It does have 67 million in the float and 88.2% short float volume on Friday. So that's pretty ridiculous. You know, wouldn't take much for this one to squeeze in the open or after open. And next one we have COL. Rockwell Collins. Ignore these from prior support and resistance down here. So this one was testing all-time highs. Really, it's really rare right now for me to find all-time highs, all-time breakouts for stocks. However, this one did have that happening. You can see over here for the year, 142.61 was the 52-week high, which is also lifetime high for the stock, and 142.13 was the day high. So 141.08 as support and 142.15 for resistance. After that, I would look for that 52-week high as resistance of 142.61. This one does have 163 million in the float and 25.5% short float volume on Friday. I'll pull it back on the yearly chart so you can see that's a yearly right there. So you can see that this one really does have potential to break out if the momentum is behind it. Last one for our longs is EQ, Equilium. And Equilium has been setting a new 52-week high here, 1969 on Friday, so I look for that as resistance, 1760 as support. It does have just 5 million in the float, so it is a low float potential runner with 42% short float volume on Friday. So there's not much history here to it, so keep that in mind and keep it on watch. Remember, these low floats, as quickly as they run up, they can run down. So this one had a nice $4 move to it on Friday, and it could continue up. You know, if the momentum jumps in behind it, I think we're looking at, you know, maybe up to 22.50 area, if not higher, if it does break out from here. On to the shorts. Amazon. Amazon is definitely on my short list. You know, as long as it stays below this blue line, 1543.85, which had big volume on it on Wednesday, I would say that to me, that is definitely a short, as long as it basically stays below this downward trending line, because it has just been hugging that and breaking down from there. So I think we've definitely got some more downside to it. In the direct, you know, for the day, I would say a support of 1501.75 and resistance of 1509.46. It does have 408 million on the float. For the next one on the short list, we've got a lot of retails here. Please ignore these lines here. We'll get rid of those since we are downtrending. We are way away from those. All right, so we do have 63.6 as support, 64.15 for resistance, and it has 165 million in the float. This one did close, you know, it had downward trend. Friday obviously was lower volume, so we closed at 1 o'clock, and then look, it had a little bit of volume afterwards, but it pretty much kept at that same closing price for the day. But it has been in a downward trend, and with earnings, it's definitely in a downward motion. So this could be a third day continuation. We see more industrial selling happening coming up into the first day of the week because of the holiday. So we shall see about that. And then we also have Ross, same scenario, earnings, 3 days down. We'll see if it does set a bottom in here, but I would say it's more than likely going to have more of a sell-off because of the holiday weekend. 79.80 for support and 80.45 for resistance. It does have 368 million in the float. And we also have Target. These holiday weekends, they could very well change the trajectory of these stocks, because if they come in and they report the numbers over the weekends, that could actually bounce the retail sector. So keep that in mind. But for right now, they're really tanking. This one, I would say, I don't have the lines drawn, but we can go ahead and do that. We'll do a horizontal line here. So I have for support 67.35, which was the low, basically 67.21 we'll do. And resistance, I have 67.15. Now here we go. 67.71. So just pull it down here, right around there. 67.86, 67.71 area, as it does look like it was consolidating right there. So that could be the bottom for it to go upwards, or it could be a consolidation for a further down move. They could be holding it there to sell and bring it down even further. Last one is Citigroup and JP Morgan right here. $882 million lawsuit that was set up for them. I'm not sure why it didn't put the lines in here. Anyways, okay, so we have 61.98 as resistance right here, and for support went ahead and 61.73 or 61.70 right there. So looking back at it on a yearly chart, we are breaking down 52-week lows, so keep that in mind. We pull it back on a 5-year chart. We have a bit more room down here, down to this 200-day moving average on the weekly chart of 58.84. Below that, we could go down further, 56.74. All right, guys, as always, carpe profit, seize those profits one trade at a time. If you do like my content, please go ahead and like and subscribe. And if there's anything you want to see on my blog, go ahead and shoot it over. Hope you all have a great week ahead. Looking forward